Hello traders, happy weekend. How are you? Vladimir Ribakov here from Traders Academy Club, and welcome to the weekly Forex forecast for the week starting of 28th of October until the 2nd of November. First of all, thank you very much for your time watching this video. I really appreciate your support, and once again, thank you for your time. I hope my video helps you with some good ideas for the coming trading week, gives you some interesting setups and ideas to follow and to add to your own watch list, and maybe even showing you some good techniques that you can apply for your own trading. If you enjoyed the video, please show your support back, hit the like button below the video, drop some feedback on the comment section. Your support, my motivation. You know my motto, it's not a secret. It's a simple, very simple truth. I make it for you, no charge. So your support is more than welcome. On the previous week, I wasn't here, so I couldn't upload a weekly video. So what we will be doing, this video is, as always, forecasting and giving an outlook for the coming week, the best opportunities, but also I would like to go and review from 2 weeks ago to see how things happen and what worked for us, what failed for us, and what basically become irrelevant. As always, we are making a follow-up. It's not just dropping an idea and that's all. Follow-up, because the market is dynamic, changes. Sometimes the setups are amazing, sometimes the setups are best not to deal with. The market conditions change, and it's very important to have this follow-up, and that's basically one of my goals when I make this video. Not just give you, okay, here is buy, here is sell, support, resistance, trend line, whatever it is, but to give you a follow-up and to show you how in real time we are making, as traders, the decisions when it's good to be long, when it's good to be short, when it's better simply not to do nothing and strictly watch other opportunities. Okay, so first of all, we go over this review and forecasting the coming week. Before I begin, quick reminder, I invite you to join our completely 100% free Telegram channel. You can find the invitation link and right there below the video in the description section, or in the comments. There is a link to join our Telegram group, completely free, just for you, for amazing educational content, trading setups, ideas, strategies, articles, and much more to come. And the last important thing is the weekly PDF structure or format, the same one that I show you right here on the screen. This is the weekly outlook in the PDF format. We upload it on Monday to the description. So basically, when my team finished to prepare that, we upload it right in below the video in the description, and also I will put it in the comments pinned for you. So just come back on Monday and follow up for the PDF format, if of course if you are interested. If video is enough for you, then wonderful. Also, I will email that, so if you are following the newsletter emails, then just follow up for the email, and it will be there. If you want to join the newsletter of mine, then just go to the blog vladimirribakov.com and join newsletter. You will see it on the right side of the blog. So let's begin. Couple of weeks ago, the first pair we've had on the watch list, as always, the most tradable pair. This is the euro dollar. Our plan was very simple. We are looking to sell the rally, so that was the case. We wanted to see the breakout, right? So this is where we got it. Let me just open my virtual pen so I can draw that here. Okay, so we got that idea. Oopsie. Okay, trendline was broken, and since then we are bearish. The biggest question is that over? I do not think so, and the reason I do not think so is because we aren't yet around the cycle levels of the weekly chart, and the weekly chart divergence yet not completed. It's potential, but MACD is still going down. We don't know for how long that can be. Dropping on a daily chart, we need to make sure that the daily forming a cycle by itself on the second leg from the weekly, and it does, and divergence appears. But again, we don't know yet, because the weekly not over yet. Daily might be just a temporary correction. So the weekly is not over. Daily looks like a double cycle with a bullish divergence, meaning short-term rallies could happen. For that, we drop to the 4-hour chart. We confirm the second leg from the daily to be a cycle by itself on the 4-hour. It does. It ends with the bullish divergence, meaning simply we are in an acceptable scenario of a bullish correction. Correction could be in two variations, two waves pushed to the upside, or a range, meaning we can be exposed to something like that before a sell, or we can simply be dancing in this kind of a structure before the next portion will come. The idea is very simple. Sell the rallies for the longer run still remains the idea, aiming 111, 110 from the weekly chart, maybe even lower. On the short term, we can see the correction. On the 1-hour chart, we also can see that it's clearly making here one false break and two false breaks, right? So basically this is the first, but they both belong to this low right here. Closed above this high, making the short-term convergence, basically approving what we expect, short-term retraces. After I would prefer go and sell them. So the rallies could get stuck around this area as in a range, as we said before the sell continues, or to take us towards the area of 114.50 up to 115 or so, maybe slightly higher, maybe back to the trend line here, right, before the next portion of the sell is expected to come. Invalidation for that setup would be this high. So this is as per the euro versus the dollar. Our next pair was euro versus the pound. We have reached the zone of the 087, 087.50. We wanted to see the corrective cycle happening in two waves or a range. Currently there is no range, but there are two waves. This is where it takes us to, right? Our plan was very simple. We want to go and look to sell that. Now we do need to pay attention that this trend line is breaking. However, it still holds the structure of a bearish hidden divergence on the daily chart, meaning it is still under bearish pressure. Well, I would say at least as long as this top holds as invalidation. So we need to go to the 4-hour chart. We drop our levels here, and this is what we get. Okay, the critical zone of the 161.8. We are talking about approximately 089 up to 089.30 area. This last high is a clearance area, very logical. We will see some stop losses taken here before any bearish reaction, and from this zone I would be looking for possible sell setups like a false break, bearish divergence, trendline breakout, or simply beautiful bearish structure of bearish candles. I would be confirming the 4-hour chart setup as we have it with the 1-hour chart. Once we have both confirmed bearish scenarios, I would be looking for possible sells. So the bearish idea is still on. The next one on the list was the Aussie versus the franc for a sell. Our plan still remains the same. Here we go. Okay, nothing really changed. We are still after sells, and the sells could happen right from here or after one more false break. Both scenarios are acceptable. The idea is looking for sell the rallies. I would not be surprised if this pair would find the momentum to make a new low for us. So for me, it is still sell the rally, and the invalidation is pretty high. It's somewhere here, so basically the best way to work with such setups, because we are dealing here with a daily retracing cycle, is to confirm with the 4-hour chart. Once they both become bearish, this is your time to start looking for the sell setups, even a lower time frame, no problem. But the confirmation has to come from 2 or ideally even 3 time frames in the same direction. Next one is the pound versus the Kiwi, which we wanted to see as a range in correction or 2 waves before we are back to buys. So the pound dollar, the pound Kiwi did not do the range, but it did not also do yet 2 waves. So the only 2 waves we have right now are pretty much forming here. And I think it's not even over, simply because if this is the 2 waves, then we have to measure it like this. So there has to be cycle area, and it's slightly lower yet. And also, if that's the case, then each of the legs from the 4-hour chart has to be a cycle by itself on the 1-hour chart. On the 1-hour chart, the first was a clear cycle there, but the second is not. It looks like double, but there is no bullish divergence nowhere. Therefore, it's not yet completed. So we can simply see that pushing down to here, that's not a good line. Clearing this area, this is a clearing zone. A lot of stop losses located here from early buyers. Clear this area, create some beautiful divergence, and start its push. Will that go to a new high, or will that be a short-term correction upside? I tend to go with option number 2, because if we break this area, that basically validates deeper correction, something like that, before further future buys. So the bottom line is, if we get this new low created to this area, this is a good place to start looking for possible buys for the coming week. Now, if we take a look on the statistical part on this pair, what we will learn here, Forex Crystal Ball. Okay, so what we will learn here on this pair is that, here we go, okay, we have critical day coming right here, 28, and this is right at the beginning of the week. So that's very, very critical. And as you can see, the beginning of the next week, of the next month also puts the pressure. So that's where I see that making this scenario, and for 1 or 2 weeks, expecting to see some bullish pressure. So that's for the, why it's dollar yen right now. So this is how I see the pound versus the Kiwi. The next one on the list is the New Zealandian versus the dollar. Our plan was to see that pushing lower, ideally around 0.62 or slightly lower. Let's go here. And the New Zealandian dollar really made the rally and now pushing lower. I still remain bearish. I still expect the 0.62, maybe even slightly lower. So for me, it's still sell the rallies. Could that make a turnaround after 2 waves like that? Yes. It doesn't change the plan. Sell the rallies was and remain the plan for me on this pair. There is a very high probability that we are exposed now for kind of a triple-double scenario, meaning it might try to make something like that, a 2-way from the daily chart, before the next push. Very, very doable scenario, but again, it doesn't change the longer-term view, which remains for me, sell the rallies. Next one on the list is the Euro versus the New Zealand. Now this one failed big time for me, because my idea was 2 waves on the 4-hour chart and buys. Here we got the level, here we got the bullish divergence, and look what happened since. So yes, we didn't never get a trendline breakout for continuation, but the level never respected, so this idea completely failed. And more than that, it's simply say that we now have a second false break after making this and this, and now creating the idea of a convergence principle, meaning we have to look on the higher time frame, see what are we exposed to. We have a triple cycle upside, bearish divergence in play, meaning that the daily has to be a corrective cycle. If the daily has to be corrective cycle, it has two variations, two options for that: two waves down or a range. If it's two waves down, that means we are expected to see something like that before a possible future rally. But look what happens here. We have one false break. We might be exposed to second false break, so the correction might really be inside the range. Does that change anything for us? No, because the plan right now, after completing a false break and making lower lows after two false breaks on a daily chart, is to sell the rally. And for that, we are going to the 4-hour chart and we are looking for selling the rallies. Very simple, very straight to the point. Sell the rallies. Now we do need to pay attention and respect this level of the 261.8. It might make some kind of a cycle here and fight around this area for a while before further continuation. But the idea was and remains the same: sell the rallies for the coming week and most likely even more. So the bullish principle that the bullish idea that we've had on the previous couple of weeks failed, was not respected by the market, and this is why I said at the beginning of the video, very important to see that live market changes, condition changes. Sometimes the ideas fail, right? We do not want to marry, yeah, our idea and then find ourselves praying to the market, please go up, please go up. No, we have a clear view. Happened, beautiful, did not happen, we have invalidations, getting out, cutting it as soon as we understand we are wrong and switching. Very simple. Never look to be right and prove the market that you are right. Market can bite. Very simple. So you want to be smart. You want to recognize your conditions when they are validated, when they are invalidated, and that's all. Move on. It belongs to history. Now you have new market conditions and you have to follow. So for me, it's very important to show you how it's done, when it's done, and that's all. So Aussie dollar is the next one. Our plan was to sell the rallies, and Aussie versus the dollar, you can simply see that our plan worked beautifully. We got the rally, we got to sell. Is that over? Very, very possible. And the reason for this very possible is a very simple situation of these two waves on the 100. Each of the weekly legs has a triple cycle, simply classical, false break, false break. So what we do want to see on the Aussie dollar to complete a stop here is basically break above this high, and then we can say we are after by the rally. So if we break this high, start looking to buy retraces. If it doesn't break, it can still try to clean here once or twice more to continue the divergence before it makes the buy. 069, 068 critical levels, and we have to pay attention to them for our further buys. Eyes on that. There is a good chance that we are going to be exposed to some kind of corrective cycle before further future move down, but it's pretty far away from now. So this is for the Aussie versus the dollar. The next one on the list was the Kiwi versus the franc. We wanted to sell the rallies. Kiwi franc, here we are. We got the rally. Two waves are in play right now, right? So this is our zone to look for sells or slightly higher, but the idea was and remains sell the rallies. Drop the Fibonacci expansion on the developing cycle. 100 is respected, so we are expected to see continuation. If not, then the next level to watch would be around 067, which is the 161.8. This is for the Kiwi versus the franc. Oops, sorry. And the next one, wrong button, the next one is dollar CAD. Dollar CAD broke dollar CAD here. Dollar CAD broke the daily high right here. So basically we can expect that to keep pushing higher. I cannot say I love this situation too much, because it might be simply false break, second false break. It might simply get stuck inside this range before it decides anything further. I still think buy retraces. However, not quite confident about these pairs. So yeah, I'm bullish, aggressive, maybe small risk. Can't say I see anything clear and crazy here. This is the invalidation for this pair. As long as it holds, retraces can still be bullish, but really can't say this is top of my pairs. The next one, dollar yen. We were after sell the rallies, which worked simply amazing for us. We got the rally, we got the sell. I still see the continuation for that. This is our developing cycle, and we do have it around 111 or 110, and according to the daily cycle and the weekly, with the weekly confirmation, our critical levels are right here, 111 and then 110. So I do expect that to reach there before further possible buys. Meanwhile, dollar yen remains bearish, so the rallies is still the plan for me. However, pay attention. We are talking about non-farm payrolls week right now. Historically, non-farm payrolls week are more positive to the yen pairs. There might be attempts to push that up. It doesn't change my bigger view. I still want to see that pushing lower to complete that. That might happen at the beginning of the week. By the end of the week, change direction. So basically work with that carefully, as non-farm payrolls could be tricky weeks for the yen pairs. Dollar versus the franc, we wanted to buy the retraces. That was our plan, and as you can see, it worked simply perfect, right? So we got the two waves that we wanted to see and the rally. From my point of view, game is over, at least for the short term. This is our double cycle that we have from the daily chart, confirmed by the 4-hour chart by itself. Divergence in play, so basically I think we are now for correction. So dollar franc, from my point of view, is sell the rallies. CAD franc, also we wanted to see buy the dips. We got a dip, we got a buy. Can we see that pushing slightly lower? The answer is yes, but for me it's still buy. So every drop lower with the bullish signs of bullish divergence, look for buy opportunities. My plan remains bullish here. Pound versus the franc, we want to see the retrace downward into waves, and this is basically exactly what happens, right? That's what we got here. Now it starts to create a bullish divergence. So what we want to see right now is basically higher highs, and then start looking for the buys. The reason for these higher highs, basically trendline is enough, but the trendline is pretty far away right now. So that's why higher highs would be great opportunity as alternative with possible lower risk. Daily starts to form a bullish hidden divergence. So yeah, we can see that making exactly the scenario. But, and I want to show you one thing here. We have to be careful here. Why? Because if we measure this corrective cycle, we figure out that we are on the 161. We can't even push the 261, and that will make it like a possible triple or special cycle. So zone number 1, zone number 2. From one of the zones, we might get exposed to two waves correction, here or here, and that's what I am afraid of at this stage. Because if that turns to be triple, and then double cycle correction, that might be for further push lower. So no rush here for any long-term decisions. Play safe and look for clear structure of the reversal, which normally comes as a false break or double bottom with higher highs created. Next on the list was the sugar. For us, the plan was and remains buy the dips. So the sugar is still here. The plan does not change. It was going up, and the plan does not change. Buy the dips. For longer run, daily has the starts to show the possible corrective cycle as well. Here it should create some bullish hidden divergence before further continuation upwards. Next on the list was the natural gas. We wanted to see retraced down. We got that. So basically, again, buy dips. This could be great area as it's holding, maybe slightly lower, but the idea for us is still the same. Buy retraces. Now indices. The indices are monsters for us. DAX, NASDAQ, Dow Jones, all of them. Look with your own eyes and understand what we are facing. Look at the DAX. Okay, see where we have it from for a few weeks now, right? It's all the way after the the trendline breakout that we had. Look at this beautiful creation. So what's going to happen for the long term? We are still bearish. Oh, sorry, that's my bad. I'm showing not that. I'm showing Germany 50. This is the DAX. Well, it's pretty much the same crash, right? For the long term, here we go. This is our triple cycle that we are following. We are bearish all the way down to here. But this is for the long term. On the short view, we start to see some fighting zones right here. So little retraces are acceptable, but for the long term, our plan is still sell the rallies. Daily has now bullish divergence, meaning 4-hour chart could provide corrective cycle, meaning that could be two waves and sell, or simply get stuck in a small range and sell continuation. NASDAQ is basically doing the same. Look at this beautiful crash. Much more to go according to the weekly special cycle. This is our last leg available. 38.2 down to 50%. This is where we might be heading. So for me, the plan was and remains sell the rallies. Dow Jones pretty much the same. After making the false break, finally it looks very impressive. Broke the daily low. Continuing, the idea for me remains sell the rallies. There might be short-term rallies, but for me they are for the sells. And some new additions for this week: Aussie versus the franc, Aussie versus the Kiwi, pardon. From my point of view, we are still in a bullish structure, creating the higher highs, higher lows. Daily had 2 waves down with a bullish divergence, so I expect further continuation. 4-hour chart making a possible kind of triple push here. 1, 2, 3. This is the area where we might get some kind of correction and then further continuation up. So Aussie, Kiwi, we are adding to the to our plan. Where is my next one on the list? Kiwi versus the Canadian, another interesting pair because the weekly has a cycle, daily expected to be corrective cycle. So I would not be surprised if daily would be a double cycle correction or at least a range. Okay, so from my point of view, Kiwi CAD is by the dips. If we have another push lower, I would be looking for possible rallies for the Kiwi versus the CAD. Nice opportunity forming from my point of view. Gold is back on the game. Weekly starts to create a bearish hidden divergence between the two highs and the daily. This is the weekly, yeah, and the daily has for us this structure. There should be here some kind of divergence developing for a sell. So what we do is we are looking for magnet zones, retraces of this Fibonacci. We are currently on 38.2. We might get the 50. as it was triple cycle up. And when we measure that, we find these critical magnets areas. I have the suspicion that we will be heading towards this area, 1260, 1270-ish before the sells. So that's what I would want to see, unless the trend line is broken and then sell the rallies. So gold starts to be interesting from my point of view for coming bearish period. And just to make sure I didn't miss anything, oh yeah, pound versus the Aussie, very interesting pair as it forms here. Triple cycle on the weekly, we have this bearish divergence. Daily should be corrective cycle, so daily should be two waves or a range. So basically what it develops for us right now is a structure of this cycle. This is pretty much the place where I expect it to stop, make some kind of correction, and then further push down. So this is for the pound Aussie, another very interesting opportunity from my point of view. Now, I was asked a lot about the pound dollar, what do I think about this pair, and honestly, I don't have a clear view. I would not be surprised if we are going to sell the rallies here again. Nothing clear for me for this pair, so I don't include it for this week. So, my dear friend, that's all. I hope my ideas give you some interesting direction and instructions, where to follow, how to follow the things for the coming week. I hope you enjoyed the video. If you did, once again, I would ask your support. Hit the like button, drop some feedback below. If you need any specific instrument that is not covered, let me know on the comments. I will try my best to reply as soon as possible if it's clear. I invite you to our live trading rooms in the Traders Academy Club, day by day, including trading reports and setups. To join us and our family and to trade together, you have the links to invitation right below the video in the descriptions, and I hope to see you with us. Thank you very much for your time watching this video. I'm Vladimir Ribakov, Traders Academy Club, and I wish you a perfect week. Happy Halloween to all of you who will celebrate it this week. Thank you. See you next week. Take care.